What's up, y'all? I wanted to watch futures open up together here in a bit just to see what happens because we got an announcement from President Trump that, Treasury Secretary Bessent, that trade talks with China went really well. And if you go to Wall Street Journal, Market Watch, Barron's, these will be the top lines on all of them for latest news. Popular news, so I'm expecting these after hours to open up pretty well. So here we go, and let's watch it together. I kind of want to buy the cues right at open and just kind of see what happens. So yeah, they're up wow, up 1.5% right off the rip, and that's exactly what I thought was gonna happen. But honestly, um, who knows if this holds or not? Because look at where the RSI ended up. Anytime this is over 60, really 70, it's kind of overbought. And this thing right now is sitting at 84. So yeah, trade talks. And with these trade talks, a lot of companies will really be optimistic because think about this effect that this trade war has on everything. Imagine if it gone away. So everything for the most part is made in China. They could make it much cheaper than we can here in the US. So a lot of what we get is going to come from Asia and China. Well, whenever these tariffs are super high and against both countries, so the US, China put the US on like 125% tariffs. Trump put 145% tariffs on China. So think about just the imbalances that causes because then demand kind of starts tightening up. And then that trickles down through the economy because, all right, well, tariffs 145% on goods made in China. Like people are already complaining about not having enough money. Prices are high, inflation, this, wages aren't keeping up, all of these different problems spending wise. So then when tariffs come in and they raise the price of already high priced goods that people are complaining about, and it's not just the pricing China charges us, right? There's a lot of wages. You got to pay for the goods to be created in these factories in China. Then you got to pay to have them shipped to the containers so they could be boated or shipped here to the US. Then you got to pay people to unload these ships. You got to pay people to deliver and truck these goods. And then you got to pay people to unload the trucks. Then you got to pay people to sell the goods and provide services. There's a whole bunch of different factors that play. And with wages being high as well, that just further collides this crash that's going on right now, if you'd call it a crash. And not to mention, before tariffs were ever even a concern, interest rates were high. And the market's been performing pretty well because I remember when the Fed first started raising rates, a lot of people in the space were talking about, well, yeah, these rates are high and it sounds really bad right now and the market's pricing it in, but they're a little bit early because it takes a while for these rates to trickle through the economy the same way tariffs do. You're not going to feel that all at once because think about it, people will eventually buy a new car, people will eventually buy a house or refinance or whatever the case is, and then variable rate mortgages. And then back to the businesses, they gotta they purchase a lot on credit, they gotta there's just a lot that goes into it. And I was talking to my brother earlier about it, and we were talking about how once demand from China starts kind of easing off, like people aren't buying goods, which results to companies expecting people not to buy goods, so they're not buying goods. They're not going to stock the shelves with a ton of inventory if they think demand's going to be low. So then there's less need for workers. So we were in this spot in the beginning of the year, and especially the beginning of the year, right when these tariffs took charge, because then it's like, all right, well, things could start going bad, but with this tariff announcement, maybe people are going to try to front run the tariffs. And all right, well, we better buy right now before the tariffs hit. And that increased the demand, which increased the need for more inventory, which increased the need for more employment. And now that we're getting to the point to where, all right, these tariffs are about to start kicking in, supplies are going to start slowing down as far as shipments. That's going to be a real interesting scenario because everybody's been watching the labor markets, and so far the labor market's been pretty good. But just today on Yahoo Finance, it's funny because I was talking about it with my brother yesterday. Like, watch these job reports right when they start going back. Start going bad. I can't type and talk at the same time. But right when these job reports start coming in a little scary, that's when people's going to start panicking, and then that'll just further manifest the root issue. And it was funny because I just seen something come out about, it was on Instagram though. Let's find it together. Let's just go to Instagram real quick. Here, I'm gonna do this. Yeah, perfect. So you can't see my screen. Let me go to the Yahoo Finance page just so I could show you exactly what I'm talking about here, because I just thought it was right in line with what I was just telling my brother, and what we were talking about is watch these jobs. Right here, 27. All right, Yahoo Finance. Of course, my computer's being a little bit low. All right, so I just found it. Let me just switch this over. All right, right here it's talking about how Americans' confidence in finding new job drops to lowest level since 2021. And think about what was going on in 2021. That was right when we knew things were going to start getting bad ahead of us after all the stimulus, after a pandemic. But this isn't the chart I wanted us to look at. Yeah, the labor market is super important in jobs, but everybody's really watching this unemployment. And Americans brace for biggest unemployment rate jump since pandemic. What are they expecting to happen? And I think this really just comes in line with the tariffs. Well, high interest rates, 12 to 18 months from when we started raising rates to whatever that point was. Now we're at that point to where, all right, well, we're really starting to feel the heat of these high interest rates that the Fed induced from raising the federal funds effective rate, the effective federal funds rate. So now we're at this point to where we're starting to, it's getting a little hot from that. And now tariffs on top of that, which increase inflation expectations. So it's like, all right, things are expensive from interest rates being high. And then things are already expensive, but now they're even more expensive because of tariffs. So we got like this double dilemma going on. And I think it's going to be real interesting to watch these next job reports, because some people are expecting maybe even as early as the next labor data set release we get, that we're going to start seeing numbers that are a little bit sketch. And that just goes back to this productive US-China trade talk. So everybody's looking for hope right now. Right now, the Federal Reserve's not so much in the driver's seat. Federal Reserve Chair Jerome Powell already mentioned that he's okay being a little bit late to the party, because the Federal Reserve, although some people think they control the narrative, they really just react. They could raise rates or lower rates depending on what the economy is doing. They don't raise rates or lower rates and then the economy react to them. It's the other way around. And they know that they're usually late, and they don't want to be early because the Federal Reserve has credibility they got to stay at work at. They don't want to lose their standing in the global ballroom, I guess is the way to say it. So we know that they're okay being late, and the market is looking at T-Man, the man in the office, the man with the spotlight on him right now, because he's going out tariff here, tariff there, super tariff on the person we get all of our stuff from. And that really slows demand. That really adds cracks in the entire foundation of the system. So everybody wants hope regarding that. And that is where we come in with the tariffs and this US China trade talk. That's why the market today is so happy. And I'm expecting that this optimism will continue tomorrow because we still got more news coming out tomorrow. There was a little bit of details that actually came out regarding these China US trade talks. They just told us that they went well. Now everybody's wondering, well, what if these tariffs are going to be dropped significantly? That's great. That's great because they're not 145% anymore. But what if they're not? And what if it's everything's progress, right? But let's just say it's like, why are we celebrating this like such a small achievement towards success? Like, what if they dropped tariff rates 1 percentage point? That wouldn't be as good, right? And then the Qs, the top 100 US companies, being up almost 2% in after hours the day before the market officially opens, that may or may not align. So I think this is going to be an interesting week. A lot of optimism, and I want to zoom out a little bit because I've seen this chart and it was on Market Watch actually. Let's see if I can find it real quick. It was about Fibonacci. It was super recent. Where's that? I don't know how to quite search for articles, but just real quick, because I wanted to do this together. Why can't I find it? Investing maybe. It was talking about how we were at a major point as far as the Fibonacci retracement. Here we go. The better ways to use Google. All right, the S&P 500's rally stalls at the key Fibonacci target. So I've seen a lot of stock traders watch the S&P. I like looking at the top 100 US companies. Just the guy who I bought a stock course through likes watching it, and it just kind of makes sense, the top 100 companies. But they were talking about how you see this this line right here around March 25th, like the end of March, is this little high point right here. And then right here, we're right there. I wish on Weeble I knew how to drop that where it doesn't show those. But look, I'm going to put a line right there. You see it? I'm going to make it bright yellow. And let's make it huge. So you see this line right here. This is the line everybody's been watching, and they also addressed that in this right here, that this is a point where people think we're at a potential top again in the markets, and that we could probably be bracing for another leg down. Now, who knows if that actually happens, because with this China trade news coming out, that's good news, so we could blow past that, and that would put our next stop, maybe you see this little low like right here. Maybe that puts us in a little trading window of maybe like right there. So where would that put us at a top if we were to break to the next leg? So 500. Interesting. And overnight we're at 496, so we're even more there. And look at this stochastics, pretty high regarding that. I mean, RSI is not too high, we're still just at 52, and I'm still learning how all of this works, but I think it's super interesting just how everything's related, how it's all working, and being able to experience all of this stuff happening. But back to this chart. A lot of people think that we're near a high. Without this China optimistic news that we got, who knows if we'd even be this high right now. If anything, we could be notching back down. They called it a dead cat bounce. Like think about it. If I were to pick this mouse up, drop it, right upon impact on the ground, it'll like bounce and then it'll land again, right? So that's what they think kind of happened here when the top 100 US companies went. I don't know, actually is QQQ US companies or just top 100 companies? I don't know that. See, we're all learning together. Let's find out. What is the NASDAQ 100? Because that's what the QQQ tries to track. Issued by 100 of the largest non-financial companies listed on the NASDAQ stock exchange. Is the NASDAQ 100 only US companies? No, the NASDAQ 100 includes companies that are listed in the NASDAQ stock exchange, which can include foreign companies as well that meet that specific criteria. All right, perfect. I'm glad I got some clarification on that. But over here around the middle of February, it's pretty much been straight down. And a lot of people think that in the short term, we got this optimism, good data sets coming out on the economic calendar, the Fed, really holding stance. It's really been Trump pumping the markets, telling individuals to buy the stock market, that you want to be part of this rally, and that's driven a lot of optimism. But a lot of people are still being cautious and are saying that they'd rather get out early than late, because you don't want to be late when the party stops, when the disco music turns off and the lights get turned on. Nobody likes that guy. So I think this is going to be an interesting watch. Yeah, looks like we're consolidating. If anything, we might see a little drop here pretty soon, because up almost 2% after hours. That's a lot for this to move. So we'll keep watching this. I just wanted to share some of this together and watch the market start trading after that news. I thought it was positive, and that's exactly what happened. So we'll keep watching this together. I'll try to start coming out with more updates so we could watch this stuff together, learn together, and just hang out. Thanks for being here.